Everyone, happy Independence Day for in the Philippines. I know this month we're celebrating the Independence Day. We started last Saturday. There are events, gala, and one thing that we never run out of is food booth bazaar the whole day. So it started Saturday, then Sunday. I think it's in June 12. Now, as much as I want to attend all those events, I also continuously network and immerse myself in the community of Dallas from different business organization, nonprofit organization. We even went. I haven't posted a lot of pictures so far. It's just now the weather also. It's one of the things that's really hot. I think we're in the 85 degrees Fahrenheit. The good thing about in bigger city, especially like here in Dallas, there are different events, whether you want entertainment, whether you want business or spiritual, mental health. There are every type of business organizations. Also, they have different schedule and time. But then through here, because I start from, I always consider a startup company here in Dallas because I'm the new kid in the block. Immersion from different communities are very important. Actually, today I even have my virtual group. This is via Zoom. This is a business anonymous group where we can talk about different challenges in the business. But speaking of challenges, I think one of the common questions that we're facing with clients are the investment. Since we are making money, especially your W two or even your 1099, making 100,000 or 90,000 and above, you are subject to the higher tax rate. But the question is, there an option for you to minimize those taxes? And there are different ways we discuss on the forum in the nurses group. There are different types of investment where you can put your money that have pros and cons. I always try to give educational information, but this is not any legal accounting by any means. This is not legal or accounting advice. You have to talk to your tax professional, your accountant, your CPA, whoever your trusted one. There are pretty popular investment that we encounter. So the first thing is they're talking about 401k. When the first time you got here in the US, especially when you go to the hospital, they're going to offer you the 401k. And the 401k is, it's more investment by nature, but any money that you put in the 401k upset your taxable income. For example, you made 100,000 and then you put $5,000 on your 401k. So instead of you subject to tax at the 100,000, there will be only 95,000 will be your taxable income for your year 2024, because any retirement income you park there, it has upsetting your taxable income. Then the other good thing about it is your employer could actually match that contribution. So if they put 5,000, you put 5,000 in your 401k, your employer can also put additional 5,000. So all in all, you have a 10,000 investment on that retirement account. And the good thing, it has a tax benefits. Number two, you're starting to plan for your retirement income. Use the left 2 lanes to turn left onto Moody Street. Again, the situation here is the more money you make, it's not about the money that you're making, it's about the money you're saving and investing. But make sure that there are two things that should work on your favor. Number one should be the time. The earlier you invest, the better, the higher chances. And then number two is the taxes should be working with you, not against you. So that's why. I know you can put your money in some your checking savings account, but they don't have the tendency to compound, because checking and savings, when you put your money there, it's only, you just need to put your month-to-month bills. You just have to put it there on your 401k. And then at the same time, you also put like an emergency fund. Those are, for me, those are the only advisable money that you can put on your checking and savings. That if you're spending 5,000 for your budget monthly, you need to have 5,000 there, and then your check deposits are there for your payroll or your other income. But then emergency fund is the second savings or checking account you need to have. So emergency fund is equivalent to 3 or 6 months of your monthly expenses. So let's say 5,000 is your monthly expenses times 3 or 6. 3 or 6 months of 15 to 30,000, you need to have an emergency fund. The emergency fund, you're using it for any major expected expenses, like you you have the car, you need to buy a new car because the other car was wrecked or by accident, or the other thing is you move from one city to another, or even for medical emergency for your family, extended families, or even for yourself. So that's the use of emergency fund. After that, what are the other maximum contribution of 401k in a year? The maximum contribution is 23,000 for 2024. But the older you get, the age of 50, the bigger you can contribute in able to do the catch-up contribution.